Hello traders, Gary Wagner here just after 11:30 in Honolulu, 4:30 in New York on Tuesday, 10th day of December 2013, and this is the daily report for gold and silver. We have a massive, strong upside move in the precious metals markets today. They are just coming off of their highs, but for example, we've got gold currently trading up well over $20 at about $21.30. You can see current print on the screen is $12.61 and change, $12.62 and change. That's your bid-ask spread. The low was $12.40 and the high $12.69. Solid upside move. We did exit our short position. We took $25 profit. We went short at 76. We had trailed our stop to 51. Of course, we got out at 51. Market is well above that right now. Same thing happened with our silver trade. You can see this beautiful little pop that we saw in silver, up 56 cents, 2.82% higher. Low is 1973. The high is 2055. Of course, currently trading at 2036, and we had moved our stop to 2025. So we pulled out with about 25 cents in profit on our silver trade. Both silver and gold are out. We are flat in the market, and I feel good about that because I do think that this is the kind of rally that we've been looking for throughout the year. We've really only got one rally. We'll talk about our next move. We'll talk about today's trade, all on today's daily report. Traders, there is absolutely no doubt that today's move is significant, and it is significant both long-term as well as short-term in the market. We're going to start by looking at some of the short-term charts that I have put out. We have been looking at the 60-minute chart, and really effectively what we have been looking at has been this long-standing resistance level just above 1250, call it 1255, top 1, top 2, top 3, and then as a matter of fact, top 4. So we had not a quadruple top as this market attempted on these last 4 occasions to really run above it, but it was met with selling pressure every time that it did. We also noted that we had some real support here at about between 1211 and 1225. You can see this major band of support after it comes off of this low. Of course, it hits this low, then we get resistance. We're trading in this band, comes back down, but does find support at 25, as we can see right here, by the number of lows that it attempted to find and not make it lower. Of course, then as the market came up, you can see it really ran through this price point with a fury. That's the first, 1252. It makes it above. We said that the high was roughly at around 1268, 1269. So it made this top in here, but lo and behold, as we look at the market right now, the one significant factor is the fact that it does seem, at least now, that it is attempting to see if it can find some real support at this 1260 area. When we look at the marketplace itself, you can see without a question of a doubt that we've got a little bit of backfill going on, but it does appear as though this market is genuinely right now poised to find some sort of supportive action right in this area. Now, what does that mean? Well, first, we're going to let the dust settle. We've just gotten out of a profitable trade. We've got a profitable year. We have been talking about a setup and really what we're looking at for next year and the conclusion of this year. All of that is to be found in the outlook that we're doing right now. We've presented part 1 and part 2 to you. We sent out notification this morning where you could watch those particular links. And right now we are looking to see, of these models that we have been looking at, which model seems to be unfolding and have the highest probability of actually becoming reality. And we'll talk about that all on today's show. But let's go ahead and pull up our next chart. Now, the next chart that we are going to look at, it's a simple 240-minute straight candlestick chart. Let's go ahead and move that, compress that a little bit, and that will allow us to do the following. This is that quadruple top that we noticed, and we had this clear breakout above that. But when you take a look at the actual candlesticks, and realize this is very short term, but interestingly enough, we have a variation off a Three River Evening Star. It's just that when a market will come down or go up, you can have that tendency to find this. You've got a large green candle. You have a doji in the center, so it's a long-legged doji in that it's got a pretty strong body from the low to the high. It closes approximately at midpoint and now is trading a little bit lower, so we've got the beginnings of a red candle. You can also see a variation of a Three River Evening Star short-term right here. Market comes up, you get this long green candle. Here you get you get three dojis actually that define that pivot or turning point, and then you get your move down. Right in here, similar, and that's why we call them variations, because you do get the red candle, two stars, and then the market comes down a little bit. So what I am pointing out is that this is a fairly not common pattern, but in terms of occurrences, the occurrences of this particular pattern type at tops and bottoms, Three River Morning Star, is fairly prevalent, and this is all available in terms of looking at it from a 240-minute chart. So we're looking at a 720-minute chart. This is in standard candlestick format. If we take a look at this chart in terms of a Japanese average, because I want to look at it in both ways today, but in terms of a Japanese average chart, we've absolutely gone green. We've got these dojis, pivotal candles at the bottom. We are moving and we have closed well above this 1240, and we are now trading above this 1257. In terms of what I am looking for, and the reason I said I want to see the dust settle, is I want to see how the market reacts. We know that we've blown right through 1240. 1261 is a really pretty important number. From 55 to 60 is important, and you can see we're actually trading just above that. Excuse me. To see that, of course, we have to go back to our candlestick chart. Just remove this as our study. Now we can see that we are clearly defined above this particular price point, and the question is going to be on a closing basis, and as we go overseas, will we build some sort of a base here, and will that base be solid enough to kind of carry us through to higher pricing? So traders, as far as I'm concerned, the $64,000 question, the big question we all need to look at and try to resolve, is how this last fifth wave in terms of our Elliott wave count is going to terminate, because we've talked about two basic models. One model, a truncated fifth wave, it's really an ABC flat turned on its head, so to speak. The other model is a standard 5 count, and we go through that really on part 1 and part 2 of our Outlook 14. There will be a part 3 and 4 that will come out next week, in which we'll look to take these models and carry them forward to make our predictions for next year. But to simplify, wave 1, wave 2, wave 3, we know that. Wave 4. Currently in wave 5, I believe that in wave 5 we've seen 1, 2, I believe we've concluded 3, we're now in 4, and then we'll end up with 1/5 wave down. That fifth wave down, I believe most likely, in the way the market is trading right now, could easily be a truncated fifth wave or a bear market truncation, in which we would have a close to or an equal low. And if the market were to, of course, take this long-standing resistance out, then we could really have terminated or ended wave 5, but I'm really not going to be able to give us any kind of concrete technical evidence unless we go in and start to threaten these numbers. These numbers, of course, run in terms of where they intersect at around 1,300. So we have about $40 to the upside before we would see that. I think that genuinely we'll probably see this be a fourth wave and then a fifth wave down. If it concludes as a standard truncated fifth, not a standard, but a truncated fifth, we would see the market bottom up somewhere here. And then, of course, from there, we would go into our A, B, C correction. A correction in a bear market is going to be a bullish rally. And as a market bull, we're going to play this market in terms of whatever it gives us. We're going to try to present opportunities. But I've always been a gold bull. And right now, there's no reason to be a gold bull. We've seen the market under pressure, and that's why we have changed our strategy in terms of trading itself. But as I said, I think that we'll probably bottom out here, but we have a little ways to go before we get any kind of real technical evidence of that. Of course, major move as the market moves above 1960 to 1988. That to me was kind of our line in the sand. We saw this market really clip above that. If we take a look, standard candlestick charts daily, it opens well above that, and it's just been trading above that. Where's resistance right now in silver? Well, it's got to be just below $21 at $20.89. We'll talk about all of these factors in detail on tomorrow's show. Enjoy the chart this and the Outlook 14 part 1 and part 2. I've sent you a link on that. So we've got a lot of good stuff coming up in the future. We're getting close to the holidays, and this has been a pretty good trade for us on the short side. As I said, let's let the dust settle, and then we'll talk about our strategy in the next few days. This has been Gary Wagner, wishing you, as always, good trading. Talk to you tomorrow for another daily update and review. Bye-bye.